Start recording. Good morning, good morning, good morning, everybody. I see that we have a lot of people popping on as I'm talking. Really excited to have everyone here. Spring is in the air and the sun is out. Lorette, I see you on. You're probably hating the spring weather. As I say that, I always feel like everybody should love summer and spring. I know that it is not some people's season, but I am happier. And Kim, we are so excited to have you here today. I must admit, I am a little bit nervous about today's topic, just because I know that it is an area that I completely put my blindfolds on, or like what the things that the horses wear, and I do not go near my numbers. I try and leave it as much as I can. But at the same time, really excited to jump into today's topic, which is all about the numbers, taxes, things that we need to know, ladies, to start our business. So, Kim, I'm going to put my mic off and leave it to you. But thank you so much for being here. Please introduce yourself and then get started.
Okay. Thank you very much. I really appreciate being invited. I've been looking forward to this for a while. Myself, in my business, I cover 3 areas. One, I offer accounting services. I am a qualified CA with 20 years of corporate experience. My second leg is I am a business / life coach. And I find that, ironically, the accounting and the business and life coaching actually comes together quite well during the coaching, because I predominantly coach women in business. And then my third leg is doing workshops, and I do workshops with young adults on the finances that they should have in their back pocket as they enter the working world. And then with women in a creative environment that tend to want to shy away from their figures, and we go through a phenomenal process where we actually tap into their creativity to actually introduce them to the numbers and get them familiar with it. So that's me. I realize, as Chrissy indicated, that a lot of people are nervous around numbers. And, today's topic is already going to bring up a bit of anxiety. So I think a good starting point for all of us is to actually just do a scan of your body. Take a deep breath in and just actually scan your body. Just note where you're holding that tension and just soften it. Just release it. It doesn't need to be a scary thing. We are going to actually enter this process and this session with curiosity. And I invite you, as you are clearing that tension, whatever area it is in your body, that you just allow yourself and give yourself permission to actually just go through the next hour and a bit with just an open mind and exploring. Ask questions, be curious. And if you feel that feeling coming up for you as I'm going through everything, a little tip: do a mini hum for yourself. Humming apparently de-stresses the body instantly. So through your day-to-day activity, if you're feeling stressed, just hum a little bit or take a deep breath and just allow yourself to tap back into that curiosity state. Okay, without further ado, I've prepared a presentation, which I'm going to go through. I'm thinking maybe I am going to have a Q&A session at the end. So if you do have questions, maybe just jot them down and we can actually tackle them at the end. Okay, there we go. Let me just see that I have, can everybody see that? Put a thumbs up if you can, please. Cool. Okay. So as I said, I've done my intro. There are my contact details if needed. Okay, so today we are going to cover, moving forward would be good. Let's move forward. Hello. Oh, there we go. Okay, so we are going to cover, should I register my business? This is a question I get asked frequently. What do I need to know about tax compliance? Why is a monthly date with my numbers important? And how can I make the path forward less nervous or nerve-wracking? Okay, so let's get into this. Okay, as I said, a lot of people, I hear this often, and people automatically assume that they have to register their business. But it comes down to 5 key questions that you need to ask yourself. And these key questions are, who are the business's clients? So if those business clients are predominantly corporate, there is kind of a preference that corporates prefer to deal with businesses. It gets viewed upon as being more professional, etc., although that's open to debate. And the second one is, if you are dealing with corporates, are they happy to deal with you as a sole proprietor? Okay. Will the business require significant capital startup costs before they can start trading? So if you have to employ or purchase machines, any huge layouts, whether it also be hardware, if you and lots of software, etc. If you're in the development space, it's a matter of just actually looking through that. And the reason for that is because it's to do with your loan accounts and to do with the write-offs of that equipment, your depreciation. Okay, not to say that you can't claim that depreciation as a sole proprietor, but it's more to do with the loan accounts and the establishing of that. The next question would be, what is the estimated turnover in your first year? And if that is going to hit the $1 million mark, then I would consider actually registering. So when will the business reach the $1 million mark turnover? If you are looking at 2 years plus, come back and reassess this at a later stage. If you go preempt that you're going to hit that $1 million mark quite quickly, then I would consider registering a business. Now, the reason I kind of say, and again, just to put a disclaimer out there, this is just what I've seen through my experiences. And again, it's not financial advice. This is just actually through experiences. And if you want to engage in further discussions around this, you're welcome to. But I have found that when you start hitting close to that $1 million, it's actually much better to be in a business than to be in a sole prop. You do get the exceptions. I currently have a client that actually does that as a sole prop, but that's very rare. So it comes down to that. So depending on your responses to this will depend on whether you actually do need to register a business. Sometimes when you're starting out, knowing what your turnover is going to be quite difficult to anticipate, because you're not sure what the take-up of the product is going to be, if it's a product or the service, etc. You can delay for 6 months, assess it again in 6 months' time, and then make your decisions. Okay. Now, the tax requirements. Again, take a deep breath if you feel yourself getting a bit nervous there. Okay, so the tax requirements for a sole prop. The first 2 on the list are the standard. Every single sole prop needs to do provisional tax, which is done in August and February of each year. And then you've got income tax, which gets done once a year. Okay, if you employ staff, you're going to have PAYE, and the requirement there is by the 7th of each month that is submitted and paid. And then if you do register as a sole prop for that, which is unusual, then it's every 2 months. Okay. If you go in the private company route, the exact same applies, except that you will have your SIPC. because the minute you register a business, every year you need to do an annual return to let SIPSI know that your business is still running. Now, they have become incredibly sticky around that registration, that annual return. So if you do have a business, please do not miss registering, doing your annual returns. What is happening is SIPSI is actually deregistering it within a 3-month period. So if you don't, from the date that you register your business and you don't do your annual return a year later, 3 months later, they will deregister. You can request to take it out of deregistration, but it's quite a process to actually go through. So rather just note it down as to what your date of registration is, and just make sure every year at that date you go and do that update. Okay, with a private business, there are 2 other taxes that you can actually look at, and they are your small business tax and your turnover tax. But I'm not actually going to get into that now. That's going a little too deep. Okay, sorry, I just need to change something here. Just give me a sec. Okay, there we go. And okay, so your monthly date. Why is it important? So things to consider is that your business is like a child, and it's a child that you are raising, and it needs attention and care and regular check-ins to actually grow stronger. And if you ignore it, then you won't actually realize when the child is changing, and you will miss out potential signs that it needs attention. So I recommend for yourselves that you actually put in a date. And you might only need 3 hours in a month. Sometimes you might need a whole morning. And in that morning, you literally catch up with what you need to catch up with from a accounting perspective. So what that would look like, if you have an accounting system already, or if you are doing this on Excel, you have your receipts, you know what you've invoiced, and you then just get your systems up to date. That then allows you to look at the results, and it allows you to pull certain reports that you can then actually start looking at and see what is coming up and what things you need to particularly note. So the time period for this is normally the end of your first week or the beginning of the second week into the new month. And the reason for that is sometimes if you have clients paying you, they might only pay you in that first week, or you've got things that are you're still waiting to come through. So it's quite a good time just to schedule it for the end of the first week. Okay. Before I get into what we're going to need to look at that monthly check-in or that monthly date, I wanted to just kind of give you a general format for a profit and loss. And this is normally the area that we're going to particularly concentrate on. So you have your income, and your income might, as in my case, I have 3 different forms of income. You might want to split those out for yourself so that you can actually see what's happening within them, or you group them together. So you have your income. If you have any costs to providing that income, that is known as a cost of sale. So for example, if you have a product and it costs you to put that product together to be able to then have it in a position to actually sell it, those are the costs that are going to come into this cost of sale item here. And the income less this cost of sale gives you gross profit. Now, anyone who provides services, those services, you're going to have your income, and then that is going to be your gross profit because you don't have any other expenses related to it. You're then going to have operational expenses coming through, and that operational expenses, rental, telephones, software, subscriptions, teas, coffees. Something to remember as a sole prop or even as a company working from home, we sometimes forget that if we were based in an office, we would actually incur tea, coffee, milk, sugars, and toilet paper expenses. So once a month or once every 2 months, you buy those separately and you can actually process that as an expense through your business. So I also challenge you to look at those expenses in your business. Firstly, to ensure that you are claiming everything you should be claiming as an expense. And secondly, and we're going to look at that now, just to actually see that those expenses are not excessive. Okay, that's operational. So gross profit less operational gives you net profit. And your net profit, you then incur this little thing called tax, which for some people can be quite a big thing, which we'll talk about. And then we get to profit after tax. Okay, so I wanted to just kind of position that for everybody so that they have a general understanding. I know a lot of you might already have that. Okay, so why do I need to have this date? Because we want to look at trends. And ideally, when you extract reports or when you are looking at an Excel spreadsheet, it is ideal to put your figures month on month. Because by doing it month on month, you can actually see any seasonal trends, any dips. Let's talk about income, any dips in income. Was there a particular reason for it? Is this something that the whole market is experiencing? For example, the Jan to March of this particular year, everybody seemed to slow down. A lot of businesses actually, in some cases, almost came to a halt, and people were going, "What's going on?" And then all of a sudden, in April, things started picking up. So there was just a general trend in the market that, people were just being a little bit more conservative. So we need to just look at those. And also, if you have a seasonal business, to be able to track that seasonal business, because that you're going to need to know for future cash flows. So if you know that your summers are particularly busy, you're going to need to stash away some funds because it's got to carry you through the down troughs. Okay. You're going to look at trends within your gross profits. So are the gross profits, at a particular percentage every month? If there is a dip, why is that dip? Has the costs of from my suppliers increased? Do I need to then do an increase in my selling price? So that is quite important. And then your expenses. And by having it month on month, it allows you to be able to quickly pick up those trends, particularly in expenses, because you would normally know that, for example, my telephone is a set amount, but now it's suddenly gone up. Why is that? Oh, I know I was on the phone a lot because I was dealing with new potential clients, etc. So you must be able to explain all of that. Another point to consider is that maybe you want to take an average over a time period. So you compare your current months to that particular average to give you an idea. And then net profit. We want to kind of focus on knowing that we are moving to a profit, that it is actually moving up. Okay, drivers of our income and our growth. So obviously, everybody wants to target and ensure that they have that their income goes up, but it's looking deeper than that. It's looking at what drives that income. So is my business volume-based? So if it's volume-based, because I can only set my price so high, then it means that I need to focus on ensuring that I get out to a lot of people. The message has to get out there about this product so that I can expose my product to a lot more people to increase that volume. Is my product price sensitive? You know, have I got the luxury of being able to increase that price whenever I want to? And what impact is that going to have on the purchasing and my market share? As I mentioned, is it seasonal dependent? So then I know that I have to gear up in my less busy months for my busy months. What do I need to do? Do I need to re-engineer? Do I need help during those time periods? Those type of things. So it's those questions that we get into when we're looking at the drivers. And when we then come back and have a look at this on a monthly basis, it's not just looking at that income number. It's a matter of going, what were the drivers? So if you are volume driven, what were the volumes for the month? Be able to track that for yourself. Expenses. So expense control, particularly in small businesses, and in fact, in any business. I was listening to a podcast recently about a business, a multi-million business, and they were very, very strict on their control. So it doesn't matter, very strict on their expense control. So it doesn't matter what type of business. It's a matter of ensuring that you actually don't have expenses that are excessive. And particularly look for those ones. Subscription is my absolute hobby horse, because people sign up for subscriptions very easily and you go, oh, it's 100 Rand a month, 150 a month, it's nothing, or what have you, but it builds up. So every now and then, and I would recommend it maybe every 6 months or at least annually, interrogate your expenses. So if it's one thing having the trend and looking and seeing that it's, you know, not going out of kilter, but it's another looking into that expense. So telephone. Is my cell phone the best contract I could possibly have? You know, are the and when an upgrade comes, is it worth doing the upgrade because it is going to be added costs, etc. So it's those type of things. So at least once a year, review those to ensure that the baseline is reasonable. If you have debtors, look at what they're owing you. Are there long outstanding debtors? Don't be shy to actually ask for them. And I know some people, and hey, I can do it for other people, but I battle to do it for myself. And a little trick is you set up a email account called accounts at whoever, and you actually send the emails from that. So it's coming from a different person, a different email. Okay, so please, because debtors, if debtors know, customers know that they can actually push the boundary, they're going to push the boundary. So if you're on top every month, you get hold of them and you say, hey, even a week before, last week of the month, here's your statement, or here are your invoices, month end is approaching, just a reminder. And then the first week of the month, you then actually assess that again, because the minute they stretch it, then things can actually go out of kilter. Yeah, that's a big one for me, Sarah was saying. Yeah, it is important. And setting up that other email is, it kind of gives you a different perspective and gives everybody else a different perspective, because it also is a mindset that you're not actually asking for it, someone else is. And if you actually need a friend to get involved or someone to help you in this area, reach out and do that. Then looking at creditors, these are the people you owe money to. And it's just how much you owe and knowing when those payments are actually due. And sometimes people owing you money influences you being able to pay money. So you feel bad not being able to pay people, but if you don't have the funds coming in, then you won't be able to pay people. So it's just to ensure that that flow is happening. And then cash in the bank. So it's how much there is in the bank, and also looking at, are the bank charges actually reasonable? Is your current banking arrangement working for you? And one of the aspects to consider, particularly if you have debtors and creditors in your business, is that the cash in the business, cash in the bank, does not equate to your profits. Okay. A lot of people say, but I'm showing a profit, but I'm not seeing that money in the bank. If you were to work on a pure cash basis, and you could take draw a line in the sand and do a snapshot, at that point, if all the money, if you've got cash in, cash out, etc., then the two should be very close. However, if you've got debtors and creditors, these two are not going to be the same. And it's because you've got flows and timing of things. Because if you've got your debtors paying you 30 days after you've provided the service, you would have paid paid for those goods if you have COD for your suppliers, but you're only receiving the money later. So it's a cycle that you're actually going through. Okay. Okay. Now to make the route going forward, something I haven't spoken about, and that's the accounting systems. And that is very much, for me, it's a personal thing because you have to work with what works for you. So for some people, particularly when they're starting out, they might find Excel a better way of doing things. The other side of it is that you do get software that is relatively inexpensive, and in some cases, there are a few that are actually free, that will allow you, while you're on the go, to be able to take a photograph of your receipt. If you've just met, for example, met with a client, a potential client, you can take a copy of that and automatically allocate it to entertainment or to potential clients' meetings. So there are these inexpensive ways of actually making your life a lot easier. Excel has its place, and a lot of the work in my work that I do when I'm doing accounting services, I take the reports, I analyze the reports in the accounting system and put them into Excel to do further analysis. So it has its place. However, there are tools that can actually help you along this route to make it a lot easier. Okay. But the reason, one of the areas that I have two hobby horses that I particularly focus on, and one is your projections, and it is the projections of your sales, and it's your anticipated costs, and it is also covering annual costs that we tend to forget about. You might have an insurance that renews annually. You might have a subscription that you've got that only runs, once a year, and it's those things that you forget about. So at the beginning of your financial year, where if you run with the season, with the financial tax years, it'll be March to Feb, but you might have set up your own your own financial period. So whatever the beginning of your financial period is, just prior to that, sit down and project what you would like to do for the year going forward. And look at and slot in those expenses, slot in those anticipated costs, and just look at that so you have a feel for what those numbers are. Okay. And the second part of that is it allows for cash flow forecasting. Now, in small businesses, cash flow is absolutely imperative. Cash is king. And if you can actually get a handle on what your monthly numbers are and do a cash flow forecast, and this cash flow forecast you take 3 to 6 months ahead, and it's rolling, which means that I'm currently in September, so I am going to look at October, through to December, Jan. The minute I've stepped into October, I'm adding on Feb, and so forth. And you then just, once you've populated it once, adding on becomes a lot simpler, and you get and once you're familiar with your monthly figures, it makes it a lot easier to put that cash flow together. And the reason for doing that is because we need to know what is coming up. We have X amount in the bank. We anticipate our income to be X based on our past trends of what our income have been, or what you know about your market and what's happening within it. So you know what your inflow is going to be. Now you need to look at what your outflows are going to be, so that you can identify any particular areas that you can see going to happen. It's a warning sign. So when you've got an early warning sign, that allows you're now in a position of empowerment. You've now empowered yourself, because you can now make a decision to say, I know this is coming up. How am I going to actually treat that? And it's not a matter of going, okay, if I ignore it, it's going to go away. I'll tend to that a bit later, or what have you. It's a matter of saying, I know it's coming up. How can do I need to maybe increase my exposure to get more clients, to increase my income? Do I need to have a chat with a particular person about this, so that if it's a supplier, how am I going to deal with that? Can we navigate around that, etc.? So your cash flow forecasting, for me, is probably one of the most important, together with looking at your numbers. And when you go doing this cash flow, I'm in September, I've already done my forecast for September, my cash flow forecast. When I step in October, I actually go back and see how accurate was I on that, because that allows me, because it's one thing doing a forecast, and that's, again, Excel can do phenomenal things. You can produce these amazing numbers and go, okay, that's me, this looks fab, but it's to see how accurate it actually is. So if you go back and you say, oh, well, September I anticipated this for income and these for expenses, did it actually happen? Ooh, I forgot that I've got this expense. Now I need to add that into my cash flow going forward. Okay, so it actually aids you to make decisions, and it also enables you to be in a position where you are in control. Okay, and there we have it. Thank you. I'm open to any questions, and if you do want to follow me, I'm on Instagram at those two links.
Kim, that was absolutely amazing. Firstly, thank you so much. I've written down so many notes and so many to-dos, and Lorette sent me a message halfway through. She knew that I hadn't done my tax returns by the look on my face. But really incredible. I do have one question, just about in terms of the Excel sheets that you spoke about. Is there a standardized Excel sheet that we can find somewhere, or do you just recommend creating it yourself, or is there?
Excel does provide you. You can actually come up with. Excel does provide some. However, I find that sometimes tailoring it yourself, because it's not going to, in my case, I've got 3 forms of income. For me, I want to actually split my income out.
Yeah.
So Excel does actually have things like that. They do also have a cash flow forecast. I do have a Excel spreadsheet that I can send you that I've actually set up for you. There is also, I'll send it through to Chrissy to distribute, but a monthly check-in questions you need to just ask yourself. So I'll actually distribute that to yourself. But yes, they are available, but I will send you the cash flow forecast one.
Amazing, Kim. Thank you so much. And I see that there are some questions here. If you have multiple streams of income, can you lump them all under one company? That's from Laura.
Laura, yes, you can. My hesitance would be it's just how extreme they are. You know, something you've got to think about is that we set up businesses and companies with the view that they will continue. So when you actually set up a company, you've got to think about, I'm ultimately and eventually going to sell that business to somebody. Okay. Now, if you are, you're having multiple streams of income, how closely related are those to that company? So if you, for example, and I don't know what business you're in, if you are providing a product, but then you've got a consulting business as well, if you're not consulting and the product and the consulting are not close together, then I would be inclined to kind of hesitate. Having said that, we also have to be practical. We don't want to set up too many companies just because they might be too extreme, because you've got admin around that, you've got extra costs around that, etc. So it's a matter of kind of looking at, maybe initially look at it that you can put it together until they grow and then split it out at a later stage. Okay. And I see that the Vault app is also very, yes. Yeah, Lizelle, the Vault app is, I know I introduced you to it. It actually is incredibly useful, and that from a cash flow perspective. It also, the Vault gives you, so it's called Vault 22. It's an app that you can, and thank you for highlighting that. It is an app that you link to your bank account. Oh, that actually reminds me. Please, if you do not have a separate bank account, please open a bank account separate for your business. And I know people say, why? Because it's extra cost. Even as a sole prop, F&B, and I've just heard recently, Capitec offer sole props business accounts. And the reason I say this, and I personally have experienced this, when I started out 8 years ago, I thought, oh, you know what, I'll just put it all into my personal. It became a hassle trying to split out what was business and what was personal. But I then actually opened, I've got an F&B, a sole prop account. I opened it, and a mindset, and now a complete change in mindset. Your business is separate. It is a separate entity from you. And it's got life. It's got essence to it. It just had a complete mindset change. So what you then do is that account, you link up to Vault 22. And that allows you to, you can categorize your income, you can categorize your expenses, and then on that you all do on your phone. And then you also, on your laptop, you can pull monthly reports. And it literally, monthly reports, you can just pull out, you can have a look at your trends, you can have a look at, the various information you're actually needing for your tax returns.
That is fantastic advice. Kim, final question. This is really going to show my ignorance. Do we need to be keeping invoices and receipts and things like that, or is that old-fashioned?
No, you actually do need to.
All of them.
Sadly, yes. And the reason being, the only reason you are actually doing this is because of SARS.
Okay.
So at any point, SARS can knock on the door and go, hey, you claiming, because, sorry, if as a sole prop, if you are doing your tax return would be, you would show your business. So you're going to produce an income statement which you are going to send off, and you've got to actually identify it in your tax return because you indicate that you have a business. So if when you're disclosing that, SARS actually has a look at it, and then they come back and they go, what's in this expense? You've got to be able to say, here you go, scan in, Here's all the documents related to that. Now, that's why I'm saying, look at what accounting apps are out there, what accounting software, because I know Zoho's one that, and I can't think there's another one that actually does it as well, where you can actually photograph your receipt, and that then keeps a scan of it in. Just please make sure you've got enough storage within those systems to keep that, because then you can actually just extract that. However, with today's slips that fade over time, I would be scanning in my slips anyway to make sure that you can keep them electronically. Okay, and there's people saying, you know, Xero is very friendly. Zoho also does that as well. So yes,
Amazing.
to answer your question, yeah, and there was a comment there about F&B, Xero Bank business bank account. Yeah,
Are there any other questions, ladies? No more. Kim, thank you so much for your expertise. Sorry. And for joining us today and your time. And yeah, I'm sure that so many of us are going to have follow-up questions when we're trying to do this ourselves. And everyone knows where to contact Kim. You've got her Instagram details. So please give her a follow and Kim's business as well.
And you can also email me. I do welcome emails. So there you go. You can contact me directly there. Okay.
Kim, thank you. And everybody, thank you for joining, and well done for joining, and have a wonderful weekend. And we will see everybody next week at Bosma Meetups. Thank you, ladies.
Sorry, one last question.
Yes.
There was about, can I throw my slips away once I've scanned them in? I tend to, I'm kind of going on caution. There was a whole debate on a group that I was on yesterday that actually says you got them electronically. So, but I always tend to keep them as well, as long as the filing system can cope with it. Okay.
How many years do we have to keep that for? Jeepers, 5 years.
5 years. Yeah, 5 years.
Hold thumbs and fingers for me that I don't get audited, because then I have big trouble.
Well, that's where the electronic scanning in helps a lot, so that you can actually just have organize your files and just make sure they're secure, and then they're
2026 is going to be my year. Okay, Kim.
Cool. Thank you. Thanks,
Thank
everybody.
you so much. Thanks, everyone. Bye.
Bye.